Financial Education, or Jeremy, is a stock market and investing YouTuber that has over 685,000 subscribers and who regularly posts content that features a lot of hype and a lot of big claims about how much money you could make if you invest according to his advice. Now, I was curious to see what the results would be if you actually watched all of Jeremy's videos and decided to invest based on what he was saying in those videos. So for the first 3 months of this year, from January 1st to March 31st, 2021, I watched every single video that Jeremy published on his main channel, and I recorded in a spreadsheet all of the data for the companies that he suggested were a buy. And since I have one full quarter's worth of stock tips from Jeremy, I'm able to track in real time how those investments are doing and to see how well you would be doing if you were a follower and actually invested based on his advice. And then I can compare that data to indexes like the S&P 500 and see if he's outperforming, underperforming, or performing on par with what your investments would be doing if you just took it and put it into a simple market tracking index fund. Now, as always, if you just came here for the key takeaway, I can tell you that as of right now, June 8th, if you invested based off of every stock tip that Jeremy provided in the first quarter of this year, then you would currently be up around 22 or 23%. And that is actually outperforming the S&P 500 by around 10%. Now, if you want to see specifically which of Jeremy's stock tips are doing really well and which ones are not doing so well, and to get a more nuanced look at why his portfolio is up so significantly, then stick around. Okay, real quick, before I show you the data in the spreadsheet, I just want to say how I collected it and what my methodology is. So for the first quarter of this year, every video that Jeremy published on his main channel and every stock tip that he provided in one of those videos, and in some videos he provided multiple suggestions, sometimes up to 10 companies for even just one video. So for every stock tip that he's providing, I assumed that I was going to invest 100 fake dollars in that company at the closing price of the stock on the day that the video was published to YouTube. And in my opinion, this is going to give a pretty good idea of what would happen if you watched all of his YouTube videos and then after watching the video decided to invest in those companies. So that's what I'm tracking here, the results of $100 hypothetical investments in each of the companies that he recommended in all of his videos for the first quarter of this year. So without any further ado, let me take you into the spreadsheet. Okay, so here we are, here's the spreadsheet, and this last column here is the one that shows what the current market value of $100 would be if you invested in that stock on the day that Jeremy posted the YouTube video to his channel. So, as you can see, there's some tight spreads on some of them, and they're still hovering around the initial investment amount, but others are up significantly, and some are also down significantly. So for instance, if you invested in Dropbox or in Walgreens on the day that Jeremy posted this video, which was January 1st, 2021, you'd currently be up around 30% based on that initial purchase price on January 1st. So from some of Jeremy's early picks in January, of the ones that aren't doing well, we've got the EV companies like your Tesla and your NIO. We've got MicroStrategy, which invested pretty heavily in Bitcoin, and so at one point was up significantly, but now that there's been a massive pullback, the price of that has pulled back in line with the price of Bitcoin. And you'll see actually that it just updated in real time because I'm using a Google Finance function for the current market price of these companies. So it will update periodically even as I'm talking here. But I'm gonna scroll down slowly so you can see how some of these companies are doing. Most of them that are just sort of blue chip companies are not having really wild swings in price, but you'll see a lot of them are in the plus minus 20% range of that initial $100 investment. But since it is relatively even in terms of the ones that are up 20% and some of the ones that are down 20%, like the Teslas, what explains the fact that overall Jeremy is doing so well? Well, let me tell you, because as I scroll down here, you will see two things stand out, and that is here and here. So on February 9th, and then also on February 12th, Jeremy published videos where he spoke about AMC and where he said either he was buying or was feeling bullish or was recommending other people should look at investing in AMC. And if you've been following the whole AMC short squeeze saga, you'll know that the price of that stock has just absolutely soared in the past few weeks. So even if you were looking at this exact same spreadsheet 2-3 weeks ago, it would not have looked like this, and Jeremy would not be up 22.4% on the year or whatever it is. So let's just scroll down here to see the final results, because you'll see all of these other companies and all these other stocks are, nothing extraordinary. But if we scroll down to the bottom, you'll see, okay, now he's currently up 21.67% on the year. So even just as I've been talking here, it's decreased a little bit. But you can see that 21.6% is largely because of those two AMC plays, which have gone from a $100 investment to almost $1,000. And that massive gain on AMC based on those two videos that he published in February are really making up for some of the shortfalls of other companies that he talks about a lot on his channel, like for instance, your Tesla. And actually, as a little experiment, let's see what would happen if we took those two picks out of the spreadsheet and we assumed that he never made those recommendations. I'm just curious to see what that would do to the total results here. So I'm going to delete that row there, and I'm going to delete this row here. And then let's scroll back down. And you'll see that removing AMC and the gains from that short squeeze, then financial education or Jeremy would only be up 3.61% year to date if you invested on every single stock tip that he provided in the first quarter of the year. Now, if we compare that to the S&P 500, which year to date is up around 12.5%, we can see that financial education is definitely outperforming the market. In fact, he's outperforming it by a significant amount, over 10%. However, if we take away those two AMC picks, then he is not outperforming the market. In fact, he's underperforming it by around 9%. So it really all hinges upon those two key picks. Those two videos in February when financial education recommended AMC. So with this information, what are some key takeaways? Well, first of all, I think this is a perfect illustration of why diversification in a portfolio is key. If we look at some of financial education's other picks, especially some of the companies that he recommended time after time after time, like Tesla, for instance, if he had just focused exclusively on that company, then he would be dramatically underperforming the market. But since he included a number of other picks as well as AMC, that diversification is really what allowed his portfolio to do so well over the first half of the year. A second key takeaway here is that these gains are built a little bit upon a house of cards, because without that AMC short squeeze gain right there, then the entire portfolio would be underperforming the market, as we just saw. And with the situation around AMC right now, it's definitely a bit of a risky play, and I don't think anybody really knows where it's going to go. Of course, there's some people on Reddit, Wall Street Bets, that are calling AMC at 100,000, and then on the other side, you've got the short sellers, which think it's going to go back down below $5. And I'm not sure which way it's going to land, but regardless, there's definitely a lot of moving pieces here and a lot of risk in that element of the portfolio. The third thing that I want to stress here is that if you're watching stock market and investing YouTubers and you're actually thinking about investing in the companies that they recommend on their YouTube channels, it's important, in my opinion, to compare their records to the indexes, to the S&P 500, to the NASDAQ, or to whatever stock market index you're looking at investing in. The reason why I think that's so important is because I have a very strong suspicion, although I don't have enough data on all the stock market YouTubers to prove this, but I have a very strong suspicion that the vast majority of stock market YouTubers are underperforming the market. If you look at institutions like hedge funds or professional money managers that hire the smartest people in the world that have, all of the education and decades of experience, even for those folks, they find it very difficult to outperform the market. And the vast majority of those people do not outperform the market. When we compare the records of professionals to stock market YouTubers who, in a lot of cases, probably don't have the education, the expertise, and the experience of the professionals, and in some cases, I think, are just random people that picked up a camera and decided that they would try and make a quick buck by shilling stocks on the internet, these stock market YouTubers are probably not going to be outperforming the professionals and probably not going to be outperforming the market. That said, credit where credit is due, and regardless of financial education's background and his history, it's clear that if you followed his picks over the first quarter of the year, you would be up pretty big right now, and you would be up more than if you had just taken all that money and put it into the SPY ETF, which tracks the S&P 500. So kudos to financial education. I'm going to revisit this data later on to see how this hypothetical portfolio would be doing as more time passes, and to see if it keeps up its gains over the S&P 500 or if it gives some of that back over time. Anyways, that's all I have for today. Thanks so much for watching. If you want to see future updates on this topic, as well as other videos about investing, personal finance, and entrepreneurship, please don't forget to subscribe to the channel, and I'll see you next time.